Well, welcome everyone to our intercompany series part 2. So we're going to do a little bit of a follow-up session on what we had already started discussing on Tuesday. For those of you that might have missed that session, you have the ability to download, to access a link to our recording either on our website or we'll ask one of my colleagues to also perhaps put a link on our chat box for this webinar. So if you want to download that series, it will be, yeah, like I said, a bit of a follow-up to that session on Tuesday. I'm going to start by introducing myself. For those of you that might not have joined us on Tuesday, I'm Carol Darcy. I'm going to be your presenter today. I'm a senior manager here at Nolan Business Solutions, solution specialist. Been working many years on the Microsoft Dynamics GP platform for Microsoft and a number of ISV partners. And over the last few years, been happy to talk to Dynamics GP customers about the great products that Nolan offers in the area of intercompany and cash management. A little bit about Nolan before we get started as well. So we have been a Microsoft partner for well over 20 years, supporting and developing applications for Dynamics GP, gold certified in enterprise resource planning, as well as silver certified on data analytics. We have worldwide offices, starting with North American presence in Boulder, Colorado, and offices as well in the United Kingdom. As I mentioned previously, been developing and supporting Microsoft Dynamics GP for well over 20 years. We have certainly developed an expertise in the area of intercompany accounting. We have a full intercompany series from intercompany postings to intercompany AR for cash receipts, as well as intercompany POP to SOP that can help you address a lot of the complex accounting, intercompany accounting requirements that companies have out there. Development of our advanced bank reconciliation and electronic payments would speak volume to our cash management expertise. Today, as I mentioned, we're sort of on part 2 of our intercompany series. So we're going to focus our discussion on our intercompany AR for cash receipt module, as well as the intercompany purchase order processing to sales order processing module. So let's get started with intercompany AR for cash receipts. What are some of the key challenges that we were intending to address when we developed that solution? Customers came to us with a need to simplify business transactions for joint customers of related entities. So we're talking about a parent company with perhaps sister companies and all dealings with the same or similar customer base. How do we simplify business transactions so that from a customer standpoint, it's sort of one and the same entity? More specifically around cash receipts, organizations were looking for a way to centralize the cash receipt process across multiple companies, allowing customers to pay multiple transactions with one single payment, and then kind of let the organization deal with the distribution to the appropriate sales document. So it's kind of essentially where we're coming from with the AR for cash receipt. As part of that process, we're making sure that we balance out all the do from accounting between the related entities, which is kind of where this is a big time saver for organization. So intercompany AR for cash receipt is about a centralized cash receipt process, giving you the ability to apply to sales documents that are created in separate Dynamics GP databases. So we're seeing here, it's all built on the apply sales document window, where you have the opportunity to not only apply cash receipts to documents existing in the company recording the cash receipt, but also open up an intercompany window, allowing you to also apply to sales document in a separate GP database. As part of that process, we're automatically creating debit and credit memo, allowing you to properly balance out your do from accounting between the related entities. So on that note, let's jump right into a product demonstration and a demonstration of that process. So we're going to be working with two GP databases here today. We have our company 200, which is the main parent company that will be receiving the cash from our customer. And we have a need to apply that cash receipt to sales documents that are not only created in this parent company, but also sales documents associated with a sister company, which is company 500 in this case. So for sake of time here, the cash receipt has already been recorded and left unapplied so that we can proceed with our intercompany apply process by simply opening up our apply sales document in the sales series. We're going to work with our good old Aaron Fitz account, and we're going to look at the $500 cash receipt that we want to apply over here. I'm going to unapply documents. Oops. Oh, I think I have a document applying the other one. So we have a list of documents that we want to apply to. So we're going to go ahead and apply perhaps part of the money to a sales document in this organization. And by simply putting our cursor on this company ID field here, we have access to all the company databases, GP company databases, also present in that environment, so that we can request to see the list of documents in company 500. And let's just apply a little bit less money here. There was already some amounts applied to this cash receipt, obviously. So we're going to apply a little bit less money here, leaving us a remaining balance of 100 to be applied. So we're going to go ahead again and request to see sales documents available in company 500. And we're going to proceed with applying that to perhaps sales document 11004. So as you can see from a data entry perspective, it's only about, and then if we need to open multiple windows to apply to multiple databases, we have the ability to do that as well. The key element here is that once we hit our process button, we're going to have a balancing debit and credit created in each of the databases that will essentially do the necessary adjustments to our receivables and move that money and balance out our due to, due from between the organizations. So let's go ahead and do that. So it takes a minute or so to essentially create those documents and do the proper apply and distribution and accounting. So on our screen here, we got confirmation that a debit document was created in this company, and the associated credit memo was created in the other company. So credit memo in company 500 is applied to the sales invoice. Debit memo over here is applied against the cash receipt because part of the payment was associated with the other company. So let's just, from an inquiry standpoint, take a look at this. So if I could look at my good old Aaron Fitz again, and we're gonna try to streamline that a little bit. We're gonna look at one specific document actually. So here's the document. We're gonna go by date. So we have processed this today. So the $100 that we just processed is right here, our debit memo 1400. So we can see that the debit memo was created. If we drill back onto that debit memo, we can see the actual debit memo and that it was applied to the initial payment. So the initial payment, if you remember, was an unapplied payment. So now we have this debit memo that is essentially reinstating the receivable portion that would have been taken out from the initial cash receipt, and kind of moving that receivable to being a receivable from our sister company or company 500. And if we proceed and take a look, I'm now switching to company 500 database, and we're going to look at our Aaron Fitz account there. And let's see if I can just call the document here. So here's the, that's an old transaction though. That's not the one I'm looking at. So let's take a look at this by date. Let's do the same thing, simpler. So here's the other balance, that $100 credit memo that was created here. And then same idea. So we got the credit memo that has been applied to the initial sales order, and our credit memo is balancing out essentially the receivable amount against the due to company 200 in this case. So you can see how through we can have one data entry point in the main company receiving the cash, yet updating multiple documents and taking care of all the due to do from accounting associated with that transaction, all for you, all handled in the back end of the GP process. All right, so back to here. So the second portion of our webinar is to take a look at our intercompany purchase order processing to sales order processing process. What are some of the key challenges we were trying to address here? Same idea with this one. Organizations came to us to try to find a way to have kind of a united front in terms of customers. So how do we, help at the inventory movement level? How do we help simplify the business transactions for customers that deals with multiple related entities? So we can support the need for a centralized inventory management between those trading partners, helping you essentially eliminate dual entry of purchase orders and sales orders across the multiple GP databases. And not only do we take care of that data entry process, but it's also very important to handle that, everything associated with the transfer pricing and costing, and possibly also dealing with multiple currencies, which is fully supported with our module as well. So intercompany pop to stop to address that helps you maintain a centralized inventory management for multiple related entities that you would have across multiple GP databases. We provide a full automated loop that will keep purchase orders in one entity in balanced with the associated sales order in the other GP database, and also balancing out payment and receipts at the AP and AR level as needed. Let's see that in action as well. Before we switch to our GP environment here again, I will just go over the base scenario that we're going to walk through. We have two company databases as well again, Company A and Company B. Company A is the one where we need to source inventory. We got some customer orders to fulfill or warehouse to replenish, but the actual inventory management is all centralized in our distribution center in Company B. So from a process standpoint, the process in this case with our base scenario is initiated by Company A, entering a purchase order in Dynamics GP against a vendor that is identified as an intercompany vendor, essentially our Company B, so that when we print and release that PO, we automatically, without user intervention, create the sales order document in Company B with all the necessary information about what's required for the fulfillment process. Once the order is fulfilled by the distribution center and transferred to an invoice, we automatically auto-generate the related purchase receipt in Company A, essentially taking our inventory from point B to point A. Now inventory residing in the company database, Company A database, it can be used to fulfill customer orders or manufacturing orders or whatever you need to do with the inventory quantity at that point. So let's visualize that in GP itself. So again, working with two GP databases, Company A and Company B. So we're going to start by entering a purchase order in Company A. Pretty simple, straightforward process. Nothing sort of spectacular about entering the PO for an intercompany transaction here. The only element is that we have an intercompany vendor card set up that has a trading relationship with a vendor, or well, sorry, with a customer ID in our company B, and that's essentially how we know which customer or vendor records we need to be working with between the two databases. So upon calling this intercompany vendor and wanting to purchase, maybe let's just go ahead and purchase some cart. We're going to do 2. So we have all the appropriate information. Now, which warehouse do I want to receive this to? So we can support multiple warehouse from that standpoint as well. So we're going to receive this in our Southwestern warehouse. And we're just going to go ahead. We're just going to keep it simple for today. We just need a couple carts to replenish our inventory. So let's go ahead and print this PO or release the PO. And upon releasing the PO, Nolan Intercompany will recognize the fact that we're working with an intercompany vendor here that is associated with my company B database. So it automatically takes all the information on the purchase order and create the sales order in company B, as witnessed by this processing report. And here's the actual purchase order. So let's now switch to company B database. And let's go to our sales order entry screen. And let's take a look at our most recent intercompany sales order. And we can see that our purchase order that we initially entered for 2 carts has now been automatically created a sales order. So no need to re-enter data or anything like that. We're going to carry. We have a lot of configuration option with our module as well to allow you to carry the information that you need to carry from one document to the other, including, as an example, the purchase order number from the other database. And then we there's also elements of the customer information that we can carry through. Things like freight, taxes, and obviously proper transfer pricing. So those are all configuration elements at the time of implementation that we work through with you, again, to ensure that there's proper, transfer pricing, transfer costing, and all the elements required by the warehouse people to properly fulfill the order. So under that assumption, our inventory people have been able to fulfill this order. So we're going to go ahead and do just that. And then we will initiate the transfer of that fulfilled order to an invoice, which is when the Nolan Intercompany process comes into play again by automatically creating a receiving posting journal. So that's what we're seeing here. So it's confirming that it was recognized as a sales order linked to a PO in the other database, resulting in that receiving entry, and also just canceling some reports here that we don't need to necessarily look at. But here's confirmation of the transfer log for this company as well. So let's take a look at all this and the end result. So here's our receiving posting journal in company A. So you can see that the initial PO we had entered is completely fulfilled with the 2 carts. So effectively, we have moved inventory quantity from company B to company A, again, with proper costing and transfer pricing, depending on our setup and our price list. And also confirmation through the Nolan Intercompany Processing report that this transaction did, in fact, occur. And one last little confirmation here that we have successfully transferred the order to an invoice in company B as well. So as you can see, we're sort of fully automating the process. And again, not only from a data entry standpoint, but we're also taking care of all the accounting in the background based on our configuration. All the proper pricing and costing has been handled, posted to the right distribution accounts, which would have included some due to, due from accounts. So all of that is of no worry to the end user and all taken care of in the back end. Now we'll also highlight a couple additional scenarios that we can support with our intercompany POP2SOP module. Still with company A and company B here, but we often, we've created a bit of an extension to also support the POP to SOP process as initiated from an actual direct customer sales order. So if you have more of a scenario where you don't transfer, you don't necessarily do an inventory movement from company B to company A unless you have a specific customer order to fulfill, this is kind of the scenario we're talking about here. So here's our external customer sales order, leveraging basic GP functionality that allows you for back-ordered item to auto-generate a purchase order. As long as we generate the purchase order to our intercompany vendor, we are essentially allowing the initiation of the intercompany POP to SOP process here again. So we're just kind of going through the same loop, but the big difference here, as you can tell, is that the process was not initiated necessarily by a staff member wanting to move inventory from one database to the other, but there's a more direct association to an actual sale that occurred in company A. So upon the inventory, once again, moving from the distributor B to company A, that inventory now being available, and once again, leveraging the PO to the SO to PO link that has been established in company A, we are also automatically fulfilling the customer sales order. So the only 2 points of data entry or touch points from a user standpoint here, we're entering the initial customer sales order and fulfilling the order in company B. So you can see how we're eliminating a lot of the unnecessary step as part of that process. And finally, but not least, there could be a scenario where the distribution center in company B is the one driving movement of inventory to the related companies. So we can also support a fully automated POP to SOP process by doing a simple inventory transfer in the distribution center. So from that standpoint, if it's a business scenario where we're just, on a weekly or monthly basis allocating inventory to our various retail stores or warehouses, company B can fully manage that process by entering an inventory transfer to an intercompany warehouse that will automatically take care of creating a purchase order in company A, an associated sales order in company B, completely fulfill that order and initiate the PO receipt in company A. So again, we're effectively moving inventory quantity from B to A with all the proper accounting. But in this case, what I really like about this case is the fact that there is no user intervention for any of that documentation or any of this accounting. By simply doing an inventory transfer at the distribution center, we're taking care of all the documentation and the accounting in the background for you. So as a bit of a summary slide here for the whole week. So I'm kind of touching on, what enhanced functionality will our intercompany series offer for you, from the intercompany posting to intercompany AR for cash receipts to intercompany POP to SOP. The enhanced functionality that will help you save some time and money, I think, is all about eliminating perhaps that dual entry that you're currently doing across GP databases, trying to keep those due from accounts in balance, and really streamline that month-end reconciliation process that can become a bit of a nightmare without a fully automated process. We have enhanced processes with our module for a little bit more automated postings and really strong audit trails. So once again, just making that a little bit easier than what you might currently be able to accomplish with the basic GP intercompany functionality. And essentially with those modules, just the general ability to support more complex intercompany scenarios, including everything that has to do with multiple currencies. So a lot of our clients will come to us, and they are a worldwide organization with, organizations in the US and across the world. So obviously there's some complexities around transfer pricing that needs to be addressed around that. So those are all things that we have expertise on and we can help you with. So in conclusion, you're looking at, I think, our intercompany series gives you an affordable solution, and combined with our unmatched consulting expertise here at Nolan, we can essentially help you better handle everything that has to do with intercompany accounting. So at this time, I'm just gonna open it up for Q&A. Forgot at the beginning to mention that if you had any questions throughout the presentation, you could feel free to drop that question into our question console. So if I'm gonna ask one of my colleagues maybe to join me now, see if there's any questions that we could help address live at this time.
Hey, Carol, it's Derek.
Hello.
I'm just waiting. Maybe we'll give it a minute. I'm not seeing any questions currently or anything showing up in the chat. So.
Okay. Maybe while we're waiting for that, I will kind of move to this slide here just to take an opportunity to invite you to join us next week as well. Next week is going to be focused on bank reconciliation. Actually, not only bank reconciliation, but credit card reconciliation. So, and even any other non-cash application. We've had clients that have been very creative in using that module for the purpose of doing a reconciliation of GL balances to external statements. So we're going to be covering all of that next week, but obviously primarily on Tuesday talking about bank account reconciliation, followed by credit card reconciliation on Thursday. So hope you can join us. I believe a colleague of mine put the registration link in the chat box. So if you want to just take the opportunity to register today as we're talking, feel free to do so, or you can find information on our website as well. And Derek, back to you.
Yeah, still no questions coming up. I think you did a pretty good job there, Carol. So looks Perfect. Like we should be all right for now, but you've got the contact information up there, and we're more than happy to answer any questions or set up a time for a more one-on-one personalized demo. So.
Exactly. So yeah, feel free to reach out to us based on the information on the screen. But you can always access our website to find out a little bit more information about our products. And yes, please reach out to us if you want to review some very specific business scenarios that you have. We'd be more than happy to go over that with you. So thanks everyone for your time today, and hope you have a great one for the rest of the day.
Excellent. Thank you, Carol.